So I think Rachit set us up almost. The regulations are getting better. And so to talk about it, we have four lawyers. One is the most recent lawyer being Dr. Ramesh, and then moving, and of course Dilip, sorry, who is an industry participant, not a lawyer. So three lawyers and an industry participant, and I, on behalf of the Finternet Labs, am a legal engineer, and we're looking at the policy side. So I'd like to start it off with a quick set of introductions. Maybe Dr. Ramesh, you can start by telling us a little bit about yourself. We'll get Pramod, then Dilip and Raj to speak about what they're doing and what they've been doing.
Thank you, Abhishek. Good afternoon. Very impressive team here and outside. I see a lot of energy. I'm Ramesh. I started off as a doctor and ended up as a lawyer. In between, I managed international development finance for 12 years, and then I was an IAS officer for most of my life, and I retired as chief secretary a few years ago. I belong to Andhra Pradesh cadre.
Hi, good afternoon, everyone. I am Pramod. I have most recently completed my term at SEBI, but prior to that, worked in banks, Citi and ICICI. Got involved with the digital public infrastructure movement around the time before joining SEBI, and now continuing to interact with the Finternet folks to see what's next.
Hi, good afternoon. My name is Dilip Chinoy. I am the chairperson of the Bharat Web3 Association. BWA is really an association for the growth and development of the whole Web3 ecosystem in India. If you guys want to become members, do reach out to me after this panel and I'll be happy to get you on board.
So I'm Raj Mukherjee. I grew up in the private sector as a lawyer, but about 8 years ago I joined Coinbase and led their global reporting team, followed by Binance, followed by Consensus, at which point the US government came to me and said, would you like to help us write the crypto regulations? So I joined the Treasury Department, the United States, and wrote the US broker regs. And now I've joined Finternet as their special global regulatory advisor. It's nice to be here.
All right. Thank you so much, guys, for the introductions. So to set the context, right, we've seen today in 2025, we're looking at what I'd like to call as the third wave of regulations around crypto assets, digital assets, and blockchain. We saw the first wave around 2018, where there was knee-jerk reactions across several jurisdictions. Certain jurisdictions decided to occupy the field in terms of legislation by trying to define assets, crypto assets, trying to define how to license certain types of entities. Then we saw in 2020 to 2022, the next wave, right, where it got a little more nuanced, where regulators were looking at things like what are the existing laws that I can transpose onto these types of assets, which have the same form and function. What are the new laws that I need to create in order to be able to ensure that risk, consumer protection, access to capital is enabled. And right now we're seeing what I'd like to call as the third wave, where the Genius Act has come out, Clarity has come out. In Europe, we have MICA. We've seen regulations across in Singapore and Hong Kong, in the MENA region with Dubai coming out and having a specialized regulator like VARA. So we've seen a lot of nuance that is now coming into this third wave of regulations, where you're looking at specialized regulators for these types of assets, defining things like stable coins, looking at constructs like what is yield on stable coins, what are the risks behind crypto assets and exchanges that we need to look at. And so just to kick things off, with the fact that Nirmala Sitharaman has spoken about stable coins, I want to talk about what is the stablecoin regime looking like, right? With the EU and the UK, we have different regulations. In Singapore and in Hong Kong, we're looking at regulations which are tightly supervised, where fiat reference tokens, when they enter into their markets, they're trying to preserve monetary control. We've seen this conversation around dollarization of the global economy that's taking place, and there are fears of certain economies that their entire market economies could get eroded. So I'd like to start off, Raj, from your end on how do you see the Genius Act and the Clarity Act really impacting the world now as stablecoins start getting front and center?
Yeah, I mean, that's an interesting question. I think anybody that's followed the US trajectory of regulations understands that till about 6 months ago, the previous administration was not really a big fan of crypto. Sorry about that. And but I think the change we've seen. Let's try this. The change we've seen is a recognition that money is more and more digital, and whether the borders around the countries are less and less important in terms of trade. So what you see with the Genius Act, which passed both houses as well as got signed into law, is an attempt to bring stablecoins as a medium of payment and a medium of trade center to the American culture. You guys know that President Trump has said that his commitment is to make the US the crypto capital of the world. And you see a wave of change around that in the agencies from SEC to CFTC. And I think stable coins is something also that the culture can buy into, right? When you talk to everyday people about crypto, and I was talking to Abhishek earlier today saying that the worst thing that our industry did was call it cryptocurrency. It's not cryptid and generally not currency. So the PR problem is huge. So I think calling it digital assets, bringing things like stable coins that it's pegged to a currency that people are familiar with, I think sets the tone. I was talking to another innovator about particularly the where regulations are, and Abhishek also mentioned MiCA, which is the European regulation. And I think the way I see it is where we are today, if as an innovator and a founder, you want certainty, you can go to Europe. It'll take you about 2.5 years to get a MiCA license, but you have access to multiple jurisdictions, right? Take that ideation to market in a quarter, as you guys all do it. If you want innovation and experimentation sandboxes of regulation, the US is the place to be. But I think stablecoins is the beginning of that conversation.
All right. So, in the context of that, India right now has the VDA, which is a 30% tax where you cannot offset your losses, but you get taxed on all your gains. You have a 1% TDS on all transactions. And at this point in time, we have the FIU as not a regulator, I would say, but more like a reporting body that exists, or as a watchdog for crypto asset service providers within our jurisdiction. So Dilip, I wanted you to talk through how do you look at the current situation that the Indian regulations are in, and what is the way forward for us and as Rajesh pointed out, with MiCA and with Genius all being in place.
Okay, so if you look at the current situation, and there's one belief that there's no regulatory framework in place. There is a developing regulatory framework in place, as you yourself mentioned, that any virtual digital asset service provider has to register themselves with FIU, because primarily the reason being that there's a fear of money laundering and terrorist financing in this, and which is really what MiCA or the other WARA or the other regulators also wanted to do. The second aspect is that we want responsible advertising. So the ASCII has set out responsible advertising guidelines. The third pillar of that regulatory sort of architecture developing is that we need cybersecurity protection against hacks and some minimum requirement of the people in this, whether you have a small developer or a large exchange. So certain has got guidelines. And of course, under the Income Tax Act, there is a taxation regime, right? And the simple fundamental thing is if you're building a product, and you saw many good, you saw Dabba, you saw Xvault, you saw others there, that if you partner with the regulator and you have sandboxes, you have the SEBI sandbox, you have the RBI sandbox, you have the Telangana government sandbox, the other state sandboxes, and then you have the inter-regulatory sandboxes just been announced. So you have multiple in the SEBI sandbox, right? So you have multi-sandboxes which allow you to build products and exit out. Yes, there is no overarching regulator. There is nothing which is, like a MiCA or a WARA or any other thing. Not even like the draft Australian regulations have announced on the 25th. But I think it's work in progress. And at the moment, there's a lot of onus on self-regulation and assuming that you are protecting the consumer, etc., etc. And maybe down the road you'll see other things coming in. But again, like Raj mentioned, the issue is dollarization of the economy, is lack of consumer protection, and you know, little bit regulatory gray areas that if some fintech provider has to relate to the payments network, what do you relate to? So those are the kind of challenges that we're having. If a security issue has to refer to SEBI, then what do you have to refer to? Those are the areas that are challenging at the moment.
I think you're raising some important points for us, right? For one, it's the idea of taxonomy, which is that we need to start looking at definitions, which is something that will start coming into place. But on the other hand, we're also something that you brought up on the sandboxes, and I'd like to pick on that. So, the sandbox environments that have been created both by SEBI, by RBI, by the IFSC in Gift City, and it comes from the FCA sandboxes in UK that started the Financial Conduct Authority, where they look to try and support innovation and innovative products and developers and innovators like the ones who are sitting over here to try and bring out new products and then give it the regulatory support in terms of either tweaking, changing, or providing exemptions from existing laws. And in that vein, we of course have IFSC, the consultation paper which came out on tokenization, and the draft regulations that they're looking to pass as part of IFSCA. So, Pramod, you were instrumental in both the initial stages of the IFSC, and you spent time in SEBI, and you've seen the consultation, the sandboxes that have existed. So, I want to ask, what do you think should be the approach now for SEBI, for RBI, and for other state governments, which I'll get to Dr. Ramesh on as well, because there is now this watershed moment. It's the time to strike because the iron's hot.
So I think even as when India led the G20, I think clearly it did say that there needed to be a global architecture at some level, supporting both how the DeFi, of that matter, crypto and so on, needed to be regulated. I think we can see some sort of those activities take place, whether in the US, whether Europe, and so on. So I think you are right. It's probably the right time to think about it. I think IFSCA has taken the lead and put out, in January, it put out the tokenization of real world assets as a paper, extended consultation paper, and I think they are processing a lot of comments which have come in. So I expect that to be the first place where I would say financial regulators in India will probably put out something. Again, the Indian mode has been to be consultative. So you'll probably see a draft consultation on the regulation itself, not just the concept paper, and probably that will get refined and legislated. I think regulators which are in the domestic area will therefore look at the IFSCA as really the sandbox for the country. That is that a place where we can safely look at how innovators can sort of develop things which work, and those that can be scaled or adopted for the local currency for the domestic market will probably then get endorsement or support. That's how I would tend to see it. In the meantime, sandboxes, indeed, whether the interregulatory or for that matter, what RBI, SEBI, even the IRDA, what all they support is going to sort of anyway be available for people. I think one of the limitations, at least that I've spotted within SEBI, for instance, is that we expect a regulated entity to be the one to come into the sandbox. But again, when we heard Neeraj, I think he did say that early on, please partner with a regulated entity. So I don't think that door is closed. I think indeed it can be accessed. RBI has chosen more to emphasize points of priority where they want activity and sort of supported sandboxes in cohorts of items they have identified. So we've had different regulators taking different views, but I think all of it is to kindle some sort of thing about areas which are of priority to the country and to the regulators.
So in that vein, so we've talked about the crypto assets, we talked about securities, but Dr. Ramesh, the technology in itself has a lot of utility that can be used by state governments. So and your experience with Andhra Pradesh and the Telangana government might be instructive for us. What should be top of mind for state governments? How do they actually capture this moment?
Thank you. Let me put it this way. the technology, most of those audience here, or investors, technology developers, founders. Now, technology transcends boundaries. And so you see a very diverse response from regulators globally because it's really global in that sense. However, the economy is very much anchored in the nation states and the region, the local. The regulators in general and those who are responsible for financial management, the monetary system, they are a lot more concerned about the long-term stability, monetary stability, financial stability, the economic certainty, and above all, the citizen interest. What's the larger public good? So there's always a lag between what the technology drives and the response of the regulators or the governments in particular. One point I want to pick up is also considering the digital asset technology is global. You really need a global architecture. You really need a global architecture. They need it for a consensus. There was some beginning that was made by G20, but obviously it's not moved forwards. I suppose the US has not come on board. Perhaps other countries which are considering, but there is ultimately a need for a global regulatory architecture, and there has to be a system that really manages this globally. So, keeping that aside, the very fact the finance minister a few days ago has mentioned the stable coins, I think, and also she made very valid, progressive suggestions, is a fact that the government is thinking about this. The Reserve Bank of India, it's been said, is coming up with a discussion paper, and that should spell out in greater detail what the future direction would be. Speaking for the state governments, the states obviously would be guided because the macroeconomic management is the responsibility of the federal government and of the Reserve Bank of India. The states really follow what goes on at the national level. I think ultimately, in my view, what's really required would be the SEBI, the RBI taking the lead with SEBI, with IFSCA, with the Ministry of Finance, Ministry of Electronics, the MeitY. They must form an institutional group that would drive the sandbox. And I think that is where Neeraj Singh, I think, has made a very valid observation. I mean, how do you really work with the product, those who are product leaders here? They ought to really work with these different entities. So there's a need for an institutional mechanism which is a lot more coordinated. And some of the progressive states like Telangana, Andhra could come on board because they would have a stake in really driving a transformation of this nature. So this would require a lot more collaboration, and I believe that perhaps the RBI would take the lead, the government of India should take the lead in this regard.
That's an interesting bit, right? Like, so we're at this inflection point where we're looking at the RBI, the SEBI, to actually take and hold the regulations. But as just a thought experiment, right? If they are not the best suited to actually know how the technology is moving because they don't have technology units that are sitting and guiding them, what is the way forward for the industry as a whole to be able to maybe self-regulate itself, to create best practices that it imposes upon the community, the crypto community, the developers on its and apps on the whole? And how can then we support the regulators in pushing regulations? And I'll open this up to the entire panel, right? So feel free.
So,
Yeah. Okay.
I would probably begin by just saying that please don't underestimate Indian regulators' understanding of technology, or for that matter, its utilization. I think India has indeed been at the forefront. We just have to think about UPI. It's got nurtured under the payment systems nurtured by the Reserve Bank. If I look at SEBI's applied technology in dramatic ways, including harnessing AI and so on. So I don't think it's the lack of technology knowledge which I think it is that there are too many different technologies at play. I don't think there is uniformity in the industry players to be able to say this is that one thing which we will all swear by, right? Regulation, by contrast, is always about saying this is the minimum. This is what it needs to be, right? I think if technologies can actually evolve to saying, yes, we address those minimum, I think you might see regulators move forward. I think sandbox is an excellent way for regulators to know what actually you are deploying, how it is being done, whether the safeguards both around stability, but equally consumer protection or asset protection, whether all of those are being addressed or not. I think that is what I would say is building the confidence. And I would equally say that there have been several things in the last few years where things operated outside the regulatory perimeter, but the regulator expanded the perimeter and brought things in. I take the example of online bond platforms. I take the example of fractional real estate. Each of that, the regulator responded with a consultation, brought in the industry players for discussions, and then created a regime to sort of address this. And again, regulations are not cast in stone. Regulations get reviewed, refreshed. There are consultations which take place. There is industry feedback which gets factored in. So I would genuinely believe we are in a sweet spot, whether domestically and of course internationally. I'll defer to Raj, but this is what I sort of see in India at least.
So it's not all that different elsewhere. I think some of the points that were made, I think it's important for innovators and developers to understand. I did not appreciate the complexity of rulemaking before I went into the Treasury Department to write the rules. One of the things that you pointed out, which is absolutely important, is we would have many people from my ex-colleagues would come in, and I would ask them, what is it that you want? And I would hear 5 different things from the 5 people across the table. You have to understand that a regulator is in a very difficult position. We can't fully future-proof because you don't know what you're developing 5 minutes from now. So how are we supposed to regulate that, right? So there has to be an appreciation from the industry on that fact. The second thing is culture takes time, and financial stability takes time to grow trust, because while innovation is exciting and there's no end to that, the public good and the balance of consumer protection and failures of a structure can be catastrophic, right? Not only within your national jurisdiction, but think about it. Blockchain is supposed to remove the intermediary, right? It's the peer-to-peer, which is it's borderless. But think on the flip side of that on the risks. And one of the things that obviously the Finternet and others we've been working on is embedded compliance, right? Can compliance and taxation, the 2 core things that governments think of when they think of public good and financial structures, can that use the technology to ensure that there are less fractional sort of disbursement of trust, right? So when you think of the balance between innovation and regulation, I learned as much from going from industry into being a regulator as they learned from sort of me coming in and going, no, this is not how this works. So that public-private partnership, and that's what Sandbox has created, without the fear of penalties, right? If you guys knew, the previous Securities and Exchange Commission was very punitive, and it almost drove the biggest exchanges out of the United States. Now it's a very different posture. So I think that balance is important.
Dilip?
Yeah, so let's look at it in 2 different ways, right? The first one is, real world applications. So if a lot of the things that you heard earlier were real world applications, those need to fit into existing laws. Existing laws need to be tweaked to allow that. So, if you have fractional real estate, you have fractional stamp duty. Does your law allow it for that? Is it covered under the IT Act? So I'm just giving you one example. The second thing is an overall, kind of a regulatory aspect where you come into the financial and fintech space, right? Or if you come into the exchange or trading space. And I think there the model is if you take BWA, what we're trying to do, so we brought out our consumer guidelines, which means that if you're a member of BWA, you've got to follow the consumer protection guidelines, you've got to follow the advertising code, you've got to follow the AML or FIU guidelines and whatever is listed there. Second, you need to do fair trading practices. Third, you have a token listing guideline. Fourth, we are coming out with a kind of a investor education kind of program. I mean, looking at the Japanese and the Taiwanese or the South Korean or Swiss model, which is self-regulation, which actually fits in very nicely with the RBI fintech regulation framework. So, till there's a regulation, if you actually fit in there and then develop, so that's what we are trying to do. And I think there are existing laws if people, and that's where the responsibility in the community comes in. The community has to actually, currently, it might be difficult, why 30% tax, why 1% TDS, or why do this, but as a community, if we adhere to those rules and regulations and don't step out of line, then we are perfectly legal, right? So there's a responsibility in the community, there's a responsible as a group, as an association, and then when we look at other use cases and which you heard Neeraj actually talking about, be patient with the regulator, develop real use, world use cases so that it benefits a lot of people.
I think has been mentioned, this is an ideal opportunity for public-private partnership in this country. I mean, the industry, the technologists, they need to come together with the institutions that are responsible for regulation. I think the sandbox has been mentioned is an ideal opportunity for that collaboration to really innovate and to create. I mean, as the technology also is evolving, I mean, that's really is a challenge. I mean, technology is evolving. That's why the world is learning. And the response, I mean, even as recently as few days ago, the Bank of England governor had written an op-ed piece in Financial Times. I mean, he's broadly also saying, I mean, there are concerns. And, how do we find the stable, predictable, the risk eliminating solution? So I think this is a work in progress, and I think we're fairly advanced, and we are also in a sweet spot, Mr. Rao has said, because I mean we have global best practices to learn from, and then apply, and then take it forwards.
I think, I mean, broadly, we're all seeming to be in agreement that India has definitely not missed the moment. The bus hasn't left, and we're there. It's almost there. Dilip, you seem to have something to say.
No, you have one foot on the footboard of the bus, and the bus is moving. Just quickly, how you get the second foot up, it decides whether you go in the bus or you're left stranded.
Yeah. So one of the things that I think would probably top of mind for everybody in this room is when you're earning, say on Solana Super Teams earn, how do you manage to get that money and utilize it in India? Like how do you go and buy your groceries with it or pay your electricity bill with it, right? Like, and how does that transaction become seamless for you? So I think we've got probably 2 minutes left or something. So how do we look at that as an answer? Because that's maybe we've got the industry participants that get spoken about. They respond to the consultation papers. But it's the developers, the people who are actually part of the internet economy that really are a big unspoken part of this entire community.
30 seconds for that one. But see, if you're earning, let's say Solana, a token, right? Best is to, off-ramp it in a local exchange, right? Pay your 1% TDS, pay your tax, get fiat, and spend it. No one's going to question you. But you want to go and do something, it's a very simple solution.
Not a lawyer, but he told you exactly what you need to know. Right? So there are roots around it. And the idea that we've seen a flight, however, of developers is something that we can't take away from the fact. So while the regulations exist, the way to move forward with it, and we've seen with the FIU notifications coming out, non-compliance is not an option. And regulatory arbitrage is also not something that you want to try and pick up on. But it's also something I think that the Indian regulators can also have top of mind, that if you want developers to feel incentivized and innovators to feel incentivized within our country, we also need to be supportive of them and take some feedback from them on what they would like to see, maybe the VDA taxation looking at, or what they would like to see the TDS slabs looking at, and put that into some thought process or into some consultation papers. The last thought I'd like to leave us with, because we've only got about a minute, is the idea that we've seen different jurisdictions come out with different almost similar but different regulations for the same types of assets. And so my fervent hope is that in the next maybe 2 to 3 years, we're actually looking at moving towards regulatory singularity, where we have consistency or interoperability or unification across different jurisdictions. And so,
Well, the inherent oxymoron in that is, isn't this all about decentralization? So,
Yeah.
there's that question too. Do you want to centralize a regulatory framework when the trend is decentralization, right? I think the idea that I would like to purport is, again, going back to what the developers and the innovators need to do, is really to even take a chance and lend some of your guys or participants to the government for like 6 months so they could have a really education session. And I think if you do that, then you'll see that you'll move the needle a lot faster when it comes to the environment in which you can innovate.
last thoughts, everybody.
Very quickly, I think I would go with what Raj said, but also what I heard Neeraj say. Engage far more with the regulators. I think they need to understand what you are doing, what you want to do, and how it therefore fits within the regulatory agenda. The agendas are very simple. I think if I had to look at Reserve Bank, it's about inclusive banking. If I had to look at SEBI, it is about how to mobilize capital for India's growth. If I had to look at insurance regulator, it's about insurance for all. So, I think their agendas are very, very simple and well known. How does it fit within that is really what I would encourage all of you to write, to engage, to meet. And I think you will start to see, a lot more responsiveness from the regulators.
Very, very quickly, and proactive engagement from the industry. You got to provide a unified, coherent articulation of what's expected, what's demanded, and simultaneously from the regulators, much more coordinated action. The SEBI, the IFSCA, the RBI, and the Government of India. And so you really need a coordinated engagement to take it further.
So, my just one request, as Raj mentions, decentralized, please send us your specific problems because we don't know the decentralized nature of problems. It will help us to put it all together and when we have a dialogue with the regulator to call some of you to join that dialogue and also present the issues.
Thank you so much, everyone. This is our time. I hope it was helpful.